Welcome to FinTech 15, where we dive straight into the insights of the people who lead the way in financial innovation because we want to get that insights directly from them. And I'm your host, Talal Gondal. And joining me today is Mr. Simon Davies, and he is the founder and CEO of Davies & Co. He's the managing partner of Aucta Group, and he is the advisor board member of the Gulf Emerging Manager Institute. So, Simon, thank you so much for being here.
Thank you, Talal. Looking forward to it.
Awesome. So, in your experience, in your opinion, what do you believe is going to be the most important factor for fintech startups to be successfully raising capital? Let's say in the next few years.
Yeah, absolutely. So look, let's be slightly controversial here, Talal. It's not going to be your adoption of AI.
Right.
What it's going to be about, the success of raising capital for your new fintech firm is all going to be about your ability to be in the attention economy. How
Right.
much your personal brand is out there across the channels, LinkedIn, YouTube, etc. And that will determine your success at capital raising far more than anything else you do or build.
Awesome. I love that. So, in terms of your personal branding, so what advice would you give to the founders of fintech startups in terms of how can they start to establish the brand and build a strong brand from the beginning?
Choose one platform to start. It's very easy, isn't it? We all get it. Oh my God, I've got to be on Insta, TikTok, LinkedIn. Choose one.
Right.
Start yesterday. Don't don't delay. Just don't be reposting.
Mm.
A personal brand comes from people getting to know you. So initially, start posting about you, your journey, what you stand for. Give people an insight to who they might be dealing with if they were supporting your fintech startup. So start yesterday, choose one channel, start posting the easy stuff. And the easy stuff is the things about you because nobody knows you better than you.
Mm. Okay, I love that. Great advice. In terms of raising capital, what do you have come across in terms of what challenges do the fintech founders face in raising capital? Because that's a really big, issue at the start that everybody has because they don't have a reputation, they don't have a brand, and so how do they actually overcome those challenges?
Yeah, so look, I mean, part of the answer, of course, tracks back to that issue of, before you even start your new business, make sure you're already building the personal brand so that
Mm.
by the time you're looking for money, people can go and browse and lurk and find out about you without you even being in the room.
Yeah.
But number two, 80% of the money that backs you in the early days does not care what your innovation or product is. They care about you. They are taking a bet on you succeeding.
Mm.
So the big advice I'd give any founder is don't waste too much time doing very technical descriptions of the product or innovation you have. Focus on your skills and likability. Focus on the fact that it's going to be you that investor is backing.
Right. So what I am getting from the assignment is that you really need to start to build rapport and you really need to start to build trust in yourself before you actually start talking about your startup.
Yeah, absolutely. You and I know, Talal, how tempting it is to talk about a really cool innovation that we might have invented that we think is going to change the world in terms of software or AI or some form of tech.
Yeah.
But the reality is, your early investors probably won't understand that piece of tech.
Mm.
They probably won't understand the target market for it even or the addressable market. And
Yeah.
so, what they will understand is whether you're the guy to commercialize that idea and turn it into the next unicorn, decacorn business. And so that's got to be the focus in those first 100 conversations you have with potential investors.
Mm. Absolutely. And speaking of that, Simon, you actually wrote a book, didn't you, called Fundicorn? Yes. So can you tell us a little bit about your book and what motivated you to actually write that book?
Yeah, nice link, by the way, Talal. I like that. It's a bit like the situation with raising kids, right? No, nobody ever really wrote a good book about raising your own kids.
Mm,
And so we all
yeah.
pick it up on the way and we make all the mistakes. And it occurred to me that in my particular niche, which is helping fund managers, financial services fund managers set up and start, there was no book on what to do or what not to do. So I thought I'd
Mm,
write a book. And after 35 years of doing this, and all the mistakes I've made, I thought I could commit it to, I think it's currently 28 or 29 chapters long, and you can find a copy on my LinkedIn feed. But that's why I did it, Talal.
awesome. I love that. And you know, in your book, you talk about the open kitchen approach, right? So can you tell us a little bit about like how can a new manager adapt that flexible approach without incurring any significant costs, and what will be the sort of like the long-term benefits?
Yeah, so open kitchen or shared services, there's a number of descriptions for the same thing, right? Look, obviously, we're in this world now where we can have fractional support in almost everything we need.
Mm,
And I think, particularly in financial services, fintech, fund management, all of the cool solutions you need in your early days are already built and out there, and you do not need to reinvent the wheel. You do not need to put those same resources on your own P&L. And
mm,
so I think that open kitchen approach of choosing from those who've already built a product that's good for you now in this stage in your journey has to be the way to go. Keep, the P&L lean, but have the best of breed solutions that in truth you probably couldn't afford to hire yourself. And
right.
I think that's the flip side of this that a lot of founders miss. They feel imposter syndrome of thinking, oh yeah, but we've got fractional this and fractional that. If that means you've got access to the best of breed, that's something to be proud of, not to apologize for.
Yeah, absolutely. That's great. And in terms of your book, who do you think can benefit the most from reading your book right now?
Look, whilst it's written for more the sort of fund management community thinking about setting up, I think it's entirely appropriate for any finance sector founder because essentially what we're really talking about is founder habits.
Mm,
I think there's a big problem within fintech and financial services. Lots of the dudes setting up businesses are so passionate about their product, and I get it, that they forget that they're just founders of a business.
yeah.
They might be selling books, carpets, houses, doesn't really matter. You've got to be able to build a durable business with revenues higher than your costs.
Mm,
And I think we lose that sometimes. We forget that because of the sort of magic of some incredible invention we've created. But the bottom line is my book is built for people who are trying to set up businesses within finance.
right.
And it picks on particularly all the mistakes that my team and I have made to try to cut the number of potholes people fall into themselves.
Yeah. So it actually seems like it's a book that will greatly benefit anybody who is either not sure how to start the business or is not sure how to actually raise the funds for their business or wants to avoid the mistakes.
Absolutely right. Yeah, look, it's a very actionable DIY based
Yes.
approach in that
Yeah.
in the book. It's not, I don't get into long soliloquies of things that, you might consider 10 years time. It's what do you do tomorrow? How do you do it? And what are the likely outcomes?
Yeah.
And I love to think people will see that throughout all of the chapters that we cover.
Yeah, yeah. No, I've looked through your book, and definitely, Simon, it is very, very practical, very applicable. And I love the way like the way your tone is in the book, the way you talk. It's very conversational. So
Good.
I think the people will definitely benefit because they can read it very easily. It's very, very easily accessible.
Yeah, no, good
What?
to hear.
Yeah, and what do you think is the biggest sort of mistake first-time founders make in terms of the time and the resources that are required to actually raise the capital?
Yeah, fantastic question. Look, the first 3 years of any fintech financial services business is going to be the hard yards of raising money and building brand. The
Yeah.
big thing, therefore, that founders forget is that
Mm,
they imagine that it's going to be the product market fit aspect, the build of the tech, um, all of which is important. But of course, if effectively you've got no customers and no money to build the thing, what's the point? And so a lot of the conversations I have are reminding people that without the capital you need, assuming you didn't have it when you set the business up, and secondly, obviously, without that, visible marketing effort to find to find people to buy the stuff, then it's going to be a very difficult road. I would say 80% of founders are not spending enough time on those two things.
Yeah.
The guys who do get it right are normally the ones who founded something before. And
Right. So they have
it might,
experience.
correct. And
Yeah.
although that thing might have failed, and maybe they failed a couple of times, I
Mm.
love seeing that because I know that guy and that girl has really thought through what didn't work last time and therefore won't repeat it.
Yeah, yeah, true, very true. Okay, so Simon, let's switch gears and talk about your personal lessons that you've learned along your journey and your personal insights. So, would you describe yourself as an entrepreneur?
Yeah, I'm a founder. I'm an entrepreneur. That front and center, that's who I am. That's what makes me get up in the morning, most of the days of the week.
Awesome. So, Simon, what's the best business advice that you have ever received?
Two things. First one was I started co-hosting a TV show in the late 90s. And so this is internet had just about arrived, but it wasn't very good.
Right.
And what I learned quickly from doing that was two things that have stayed with my entire career. One is that the information attention economy matters more than anything else. We're
Mm,
not working in mills or factories anymore, right? We are
yeah,
dealing with information, and information has to be shared, and that happens on channels.
true.
Your channel that I'm sitting on today is a perfect example. So the first thing I learned 27 years ago was how important being in the attention economy actually was.
Mm,
And before that, I don't think I'd really understood that. The
right.
second thing that came from that journey of being doing media, doing TV and things was that done is better than perfect.
I love that.
Th-
Yeah.
this was live TV, right? We were making mistakes the whole time,
Mm,
but you know what? It didn't matter.
mm,
Because as long as the overall product we put out for people to watch was still compelling, nobody cared that we made a mistake in minute seven.
mm,
So that's one big area of learning for me that was an absolute game changer, and is why you see me so actively now, even at 55 years old, on LinkedIn, YouTube, various other places.
yeah.
The second big final learning, Talal, came from I was introduced to a couple of incredible people, Japanese guys and hear me out because it won't sound relevant for just a second. These
Okay, sure.
guys make steel-based products in Japan, finely crafted knives for chefs.
Mm,
They make finely crafted pens for writers. And they taught me this ikigai, this thing of
yes.
purpose.
Yeah. Yeah.
And they taught me what actually having a lifelong commitment to a mission really was.
Mm,
In our society in the West, it's almost become fashionable to sort of change and pivot and constantly be going in a new direction. And we all do that, right?
mm,
But underneath it all, I learned from those guys what having a deep mission meant. And these guys, of course, for 50 years often, because they live so long in Japan, are crafting these incredible products, getting better at it tiny bit every day.
yeah.
Those were my two big learnings, Talal.
I absolutely love that. And just going back to the first one that you shared, there's something I came across a while ago, and that kind of resonates with what you said as well. It's like, go for the 80% solution. You might not get the 100% right, but if you've done 85% and it works, then it should be good enough.
I think that's absolutely right. And I know how difficult it is for certain personality types to, it almost is, it's like people with OCD, right? It's very difficult
Mm,
to listen to.
yeah,
But I'm convinced you're right. And I think we have to get that across to our colleagues and our team members. Done is better than perfect, particularly if you're founding a new business.
yeah,
If you're running Ford US, maybe you've got to be a little bit more mindful to the perfect.
yeah.
But none of us are, right?
Yeah, no, absolutely. And even with the second lesson that you shared, I think that's really powerful too, because at the end of the day, what really matters is the consistent improvement versus, oh, we've improved 15% in one go, and then there's nothing, right? You stagnate. So what's better is that you improve 1% every day, because at the end of the year would have improved by 365%. right?
100% right. And I know it's unfashionable in a TikTok world where
Mm,
everything's all about, getting rich tomorrow morning. But the reality is in life that rarely happens. And even if it does happen, it doesn't tend to last.
true.
And I think this process of being proud of that 1% marginal improvement rather than apologizing for it was a game changer, certainly for me.
Yeah, yeah, I'm with you. Absolutely. So, Simon, in terms of your company, let's say you had to rebuild your company, what would you do differently?
It's a brilliant question. Look, I think the biggest thing that I've got wrong a lot has been in the talent people area.
Mm,
And I think what I've learned, but it took me too long to learn it, was that actually, you are not friends with your team when it comes to the actual relationship. You can have a wonderful bunch of fun together, but at the end
yeah.
of the day, you're there to achieve a mission.
Mm,
And I think too many times I was looking for that extra level of relationship, which wasn't needed. I just needed people who were better than me at whatever the topic was to come into the business and be let go to do an amazing job.
yeah.
So I think what I would do differently going way back 21 years ago when I first created this business, I think I would change how we hired, fired, and retained.
Interesting. Okay, I like that. That's really good. That's really good. Thank you for sharing that.
Pleasure.
And just very quickly, in terms of your leadership style, how would you define your leadership style?
Very, very clear on this, which is be bold and I am not the blockage. So
Mm,
go and make bold decisions. You're in this business because you're really good. So let's not get in your way.
yeah,
Uh, we'll back you if you get it wrong. And most importantly, don't feel the need to come to me for sign off. Get on with it, get it done. Let's move on.
yeah, awesome. And lastly, Simon, and you might not want to share a figure for this, and I completely understand, but you can maybe give me a range. So, what's the most amount of money you've made in a single year?
What a great question. Personally or corporately?
Whichever one you're willing to share, both if you can.
Uh, yeah, look, I'll keep it brief because I know we haven't got long,
Yeah.
but this is an interesting, uh, probably life lesson. Before I set up my shop, I did a spell like a lot of finance guys in investment banking. And there was a particular year, 25 years ago, for the bank I worked for. I made a lot of money. Of course, I didn't see hardly any of that, right? But
Yeah.
it was a very big number, like eight-figure number. And at the time, I thought that was pretty cool. What I've realized more recently, and I will be very open about this, is, I my family and I, we don't have yacht habits, but we do target to make a lot of money every year. And
Mm,
I'm very open about it. And if I am making a lot of money every year, and what does that mean? It probably means seven figures. Then it means others around me are doing rather well.
yeah.
So I don't look for the 50 million wins anymore. I look for just a very happy income stream. I
Mm,
don't need to be billionaire territory, never will be, don't care. But equally, I don't want to be worrying about next week's grocery bill.
yeah. I love that. Thank you so much for sharing that. So, lastly, then, what advice would you share for people, people like me, for example, who are wanting to transition into fintech from a different sector, and also aspire to be future leaders in the sector?
So yeah, brilliant question, by the way. Let me tackle the second bit first.
Sure.
So, if you and I were sitting here as professional sports people, we wouldn't think twice about having coaches, and yet in business, it's still relatively rare to have a leadership coach for a founder.
Mm,
Um, I will say here and now, go and get one.
mm,
Hopefully, you can get one at some mates' rates because they're quite expensive when you're on the founder journey. But get a leadership coach. I am not talking about a co-founder here, to be clear. I'm talking
yeah.
about an innocent bystander who helps you see the wood from the trees.
Mm,
That is the number one piece of advice I can give someone. And by the way, it doesn't matter if you're 25 or 65, the same advice would apply. So that's the number one thing. In terms of transitioning from another sector, I think the thing I love about that when I see it is the fresh pair of eyes. Don't be afraid to use the fresh pair of eyes. You come into an industry from a different one, And you look at this new industry and you think, why are they doing it like that? You know, we had it nailed in the industry I came from.
Yeah,
Always be willing to be brave and not afraid to actually install that thing you already knew worked.
brilliant.
And don't just assume that because it's a new sector that they must have got it taped already.
Yeah, I love that. Thank you so much. Um, to our audience, this brings to our conclusion. Thank you so much for watching. Make sure that you follow me and obviously Simon on LinkedIn. I'll put all the links below in the description so you can access that. Make sure you subscribe on YouTube. And thank you so much. Stay tuned, and I'll catch you in the next one.
Thanks, Talal.
Thank you.